we could see that this particular week for ETFs and for stocks is extremely bullish. Now, the ETFs that I'm talking about that I want to watch, let's blow this up, take a look at this for a moment. So we're talking about XLY, all right, XLF, and FAZ. Let's do the overview on each, and then we'll talk about a little bit of details on each of these. So if you take a look at all of these, two are bulls, one is a bear. FAZ is our bearish candidate coming into today. And so when I look at this information, what does this information tells me? It tells me that in the last 10 years, all three of these, and of course, I have to say this, there is no guarantee that these are going to do the same thing they've done for the last 10 years. But over the last 10 years, XLY has gone up in 10 of the last 10 years, an average of 6%, right? Between now and the middle of September. XLF, all right? XLF has done the same thing. In 10 of the last 10 years, it's gone up between now and the middle of September. And FAZ, for 10 of the last 10 years, has gone down, all right? An average of 13.5% between now and September 18th. All right. All of these look good. When I look at the data, all of these look good. All right. There's not a losing year in the last 10 years. You see that column that says last loser? There's nothing there because we didn't have a loser in the last 10 years. Do you see the column that says power? These are all positive numbers. This is great. Everything I see on the screen, I like on all three of these. So why is this bear a bear? I'm going to tell you about that right now. So we get into the details. Here's what the details look like. So first of all, XLY, for those of you that don't know, is the consumer discretionary sector. All right. This is the things we want, not necessarily the things we need. And this is the consumer discretionary stocks in the S&P 500. Right. So when I talk about houses, I talk about boats, and I talk about, and that's a lot of that's not in the S&P 500, but it's a broad extension of that. But when you take a look at those, you know, you got to think, well, if we're seasonally in an area where these things have gone up year after year, does that mean it's a good time to buy a house? Does that mean it's a good time to buy a boat? It may be. It has been a good time to buy these big things for the last 10 years around this time. And so, you know, no guarantees it's going to be something that goes up this time around. But, you know me, I'm a pattern trader. I like things to repeat themselves over and over again. And so that's an important one. The XLF is the financial sector. This is the banks. This is the insurance companies, right? These are the guys that are actually reporting next week. And it's a lot to do with why XLF has gone up in 10 of the last 10 years. Now, take a look at that last one. There it is. All right. So that's the Direxion Daily Financial Bear 3X. Okay. Two big things here. First of all, this is a bearish inverse ETF. So it has gone down when the Russell 1000 has gone up. Now, if the S&P is slated to go up and the QQQ is slated to go up and the Russell is slated to go up, then this should go down. So it is basically a confirmation that we're seeing the bullishness of the markets, you know, within an inverse. The other part of the inverse is a 3X. That means that for every 1% move that we see the Russell go up, FAZ is going to go down by a factor of 3 and vice versa. If the Russell drops back, all right, if the Russell drops back 1%, then FAZ should go higher, right? But all three of these, okay, if we were to back up just a moment, all three of these are telling us that the market is overall bullish. Consumer discretionary looks bullish into the rest of the summer. Financials look good into the summer. And when something goes down, when the markets go up like FAZ, again, that is a confirmation.